This podcast series is presented by Archetype. Archetype is an early-stage venture capital fund focused on backing crypto entrepreneurs who are working to accelerate the decentralized future. We lead investments in seed-stage companies and are always open to speaking with crypto-native founders. For more information on our team and portfolio, go to archetype.fund. This season of Cross-Chain Examination is sponsored by Talos. Institutional investors across the digital asset industry have connected to Talos to access the entire crypto ecosystem via a single point of entry. Whether on the buy side or the sell side, from Wall Street's most storied firms to crypto-native come-ups, institutional investors are using Talos to accelerate their digital asset offerings. Talos provides technology infrastructure that powers the full trade lifecycle. Talos' integrated platform supports the entirety of the trading process, from price discovery to execution and settlement. Check them out at talos.com today. Hello, everyone, and welcome to another episode of Cross-Chain Examination. I'm your host, Catherine Wu. Each week on Cross-Chain Examination, we have on the smartest voices in the crypto industry to tell us what's top of mind for them. This week, we have on the two founders of Talos Trading, both of whom I have had the pleasure of knowing for many, many years, both as an investor and as a friend, and I'm so excited to have them on to share their journey today. Welcome to the show, Anton and Ethan.
Thank you very, very much for having us.
Thanks for having us on.
We really appreciate the fact that usually you have the smartest people, but today you have us. So it's awesome, awesome to be
you
here.
Guys
Thank
are very
you so
smart.
much,
Don't
Catherine.
worry. You passed my check.
Speak for yourself.
Yeah, speak for yourself. I'm kidding. So, a quick TLDR about Talos before we dive in, and correct me if I make a mistake on any of this. Talos is an institutional trading platform for digital assets built exclusively to support the full digital asset trade lifecycle, from price discovery to execution through settlement across spot, future, and FX markets. But before we jump into Talos and the product, I wanted to ask a larger and more meta-level question, which is, why is institutional adoption and participation so important to the crypto industry at large?
Yeah. Oh, look, I mean, first of all, thanks for nailing the TLDR. That is what we do. And we're going to get into a little bit more detail in a second. And by the way, our background is actually from the institutional space. So both Ethan and I spent quite a lot of years building these kind of systems for institutions. We've done this in pretty much every other asset class before. Institutions play a really critical piece of the ecosystem in any asset class, right? So the history behind crypto is kind of interesting. Crypto started from the retail sector, which is different from the rest of the asset classes out there, right? And so you're kind of like seeing this thing that emerged out of a little bit of necessity, a little bit out of brand new technology that was available. And the cool thing that we see around crypto that I hope that we don't lose is the very fast experimentation cycle that happens here, right? Like people really tend to build things very quickly. They release things to production very, very quickly. And usually that's not the case when something starts from the institutional sector, right? But ultimately, the minute you start thinking about an asset class like crypto assets that are built on top of blockchain technology and digital assets, once you're thinking about that and you really are thinking about the next level, the next maturity level of something, institutions have to play a meaningful role. Institutions bring a lot of the established practices. They bring the tools, the practices, the risk practices. Like for instance, some of the things that we see this weekend, last week, are not events that are unique to crypto. Those are events that happened before in more traditional asset classes, but there's not been quite a lot of tools and a lot of practices that have been built around that to safeguard against these kind of events. It doesn't work 100% of the time, but that's the kind of level of maturity that institutions can bring to get the asset class to the next level.
Yeah, and if you think that crypto is a real asset class, and like I think all of us here do, you need institutional investors to come in. Like we need regular people out there to be able to invest in crypto, like through their 401ks, through their pension plans. And as Anton says, like enabling those big institutions to come into the space is going to be good for the ecosystem as a whole. It's going to help us mature in the space.
So the reason why I actually wanted to start that question was because a couple weeks ago, or maybe just a week ago, I don't know, time is confusing. But basically, Vitalik Buterin tweeted saying how he didn't think that we as an industry should be enthusiastically pursuing large institutional capital at full speed because he thought that the ecosystem needed more time to mature up before we started, getting ETFs and other things. And obviously, whatever Vitalik tweets gets a lot of attention and there was a lot of coverage on that. What would you say, I guess, to folks who are arguing the opposite take? Like, what are they missing? Or maybe do you agree? Like, what would you say to that?
My view is that, first of all, institutions is not one entity, right? So when we're talking about pursuing institutional capital, you really want to start thinking about the wide gamut of institutions that actually exist there. And that comprises of buy-side participants, sell-side participants, smaller hedge funds that are very comfortable with certain risk and certain scale versus largest asset managers that hold pension funds, for instance, that need a different level of technology, different level of services, right? So saying that, like whether you should pursue institutional assets or not is kind of like not the right question, because there's just such a huge variance of those kind of participants, right? There's no question that there's truth in the fact that, like the ecosystem is not yet fully built. If anything, the events of the past week and a half with everything that happened around FTX and the knock-on effects of that, you can see that there's fundamental things that are still, to some extent, I wouldn't say missing, but probably not at the level where they need to be, especially around risk practices, some things around audit, some things around providing additional transparency and adhering to some of the practices that we adhere to in capital markets. But those things are being built out, and we're seeing a lot of very, very strong players getting in here, including players from capital markets that are trying to figure out what should you build and how this environment should look like. So I think that the short answer is like the ecosystem is right for some players for sure. And we have seen the proof of that time and time again. And I think that there's additional things that need to be built in the ecosystem to provide support for some of the more conservative, some of the largest players in the financial ecosystem.
Yeah, we need to understand what it means to go mainstream. If you have to know how to use self-custody to be involved in the crypto ecosystem, right, we're not going to be able to broader sector. And you can debate about how quickly we should be moving into that. But we need to be able to be continuously moving forward to understand what we don't know about how to make the ecosystem more usable to everyone.
Yeah, no, I mean, I would say I like half agree with Vitalik's statement. I think the truth of the story is, and I think we saw this with like DeFi summer and NFT summer, is that the mainstream is pretty ready to jump into this asset class, whether it's owning it or holding it or using it. And I think the lack of really solid centralized options, and I know crypto people are allergic to the word centralization or centralized businesses, but the fact of the matter is, I think it's critical to actual mainstream adoption.
Yeah, but that's true for a lot of things that are around crypto, right? When we were starting Talos, like it's been 4 years ago, usually you would have conversations with people in crypto and in capital markets, and you would fall in one or two buckets. Like you would have conversation with some of the bankers, some of the more conservative bankers that would go like, listen, none of this stuff is real. It's not going to happen. Nothing is going to move to digital assets rails. Not necessarily just even talking about crypto, but talking about other things like tokenization and all that, just complete disbelief. And then you talk about some of the people that started their way in crypto, and the opinions were like, listen, it's all moving to this. The Bitcoin maximalists is a great example. They're like, you can't think about traditional markets. That stuff is going to die. It's going away. Truth of the matter is, chances are we're looking at kind of like a combined ecosystem. And the same holds true for DeFi versus cefi. There's certain things that are going to be very natural and native to DeFi, and things that you can do a lot better and more efficient and more transparent in DeFi. And there's going to be some use cases that have to live in some of the centralized facilities. And I think you shouldn't be religious about one direction or another. You should build a system that makes sense for its users, makes sense for the kind of properties that you want to build in, whether it's safety or transparency or speed, efficiency, right? So yeah, I generally try to stay away from like, it's one versus the other. It's let's take a look at both of those and try to build something that makes more sense.
Yeah, well, I'm glad you brought up actually starting off in crypto, because that was actually being my next question. I want to talk about like you two and your origins and stuff. So for anyone who doesn't know, in case you can't tell from the chemistry these two have on screen, Anton and Ethan actually have worked together before, and they were building trading infra for traditional capital markets. And actually, an even obscure fact, and I only know this because I've had the chance of getting to know you guys for a while. No, it's nothing bad. It's actually like on your resume, he's like immediate worst case. I'm not here to expose you. I just want to tell your story. Anton and Ethan, actually, when they were starting off Talos, you actually wanted to start a fund, right? To trade digital assets.
Oh, yeah.
And actually through that process, realized there were so many missing pieces and gaps to efficiently do that. So this is more of a walk down memory lane. Tell us about the difficulties and barriers in 2017, 2018 that made trading digital assets really difficult to do, and what you custom built to address that.
I mean, part of it, we didn't really know initially what we were going to do. So like we said, we started seeing something that was being built out that looks like an asset class. And we participated in a lot of the build out of other asset classes in capital markets. We've seen a lot of the evolution, the electronification. And so having played that role, you're kind of looking at this emerging asset class and you're starting to see that there's going to be a need for institutional involvement, like it's evolving and it's growing. And you think there's going to be a lot of inefficiencies. There's probably a lot of lessons you can take advantage of here and to figure out. So, I mean, honestly, like, part of it is in some ways also greedy. You're just thinking, what can we do here? And that's why the idea of the fund came together. You're thinking like, okay, we've seen evolution of electronification and seen this kind of like evolution of trading. Can we do something here? Can we start a fund? And honestly, we really didn't spend that much time on it. And I'll tell you in a second why. But generally, it was very quick that, when we started thinking about this, you kind of map the entire ecosystem and you see a lot of like common problems. You go like, okay, I mean, there's quite a lot of liquidity providers out there. They are everywhere. Liquidity providers are in the internet. The level of service that we're used to seeing in capital markets, non-existent. In capital markets, you trade with an exchange, something happens to your order, you don't know what the state of the order, you can pick up the phone and you can call somebody. You can ask what's going on. There's a lot of these kind of mechanisms. And also, especially from our background, we're getting into a new domain. We're looking at a brand new asset class. And we're seeing that there's quite a few tools that are literally just not there. Like there was not really any kind of algo trading, execution tools, the TCA, reporting, like things were done over the phone. And by over the phone, it means like usually, Telegram, Skype, Slack. It's not how you do things in capital markets. So that's kind of like how we found the ecosystem when we started playing around with this idea of potentially actually starting a fund.
Yeah, and a lot of the, as Anton says, like a lot of the issues when we first came into the space were like, the problem here is really around how nascent like the technology is and how different it is from what we saw in other asset classes, right? When you're trading the kinds of systems we built, whether it's FX, fixed income, futures, right? Everything's deployed in a data center. There's literally an Ethernet cable that connects the two machines together. You're connected to the exchange directly. If one of those connections goes down, like people manually coming in and calling the exchange, like Anton says. I mean, crypto is just so much different. Just the state of the ecosystem, the fact that it came out of retail means that the way that we needed to deal with failure is totally different. We have customers that are trading 24/7. Yeah, the exchanges go down, they have issues. And we knew that from a technology perspective that we needed a little bit different approach. And that's ultimately why we decided to build this whole system that all of Talos is all built from scratch to like specifically address these problems.
Yeah. And look, I mean, the thing is, like Ethan and I talk about this a lot. Like, I think for us, the realization at the end of this process, like we obviously looked at the operational aspects of it, the technology, and one is we realized that the problems that we're seeing, a lot of other people are seeing and will need to see, and especially if we believe that institutions are going to get involved here, like everybody is going to be thinking exactly about this because, like, we didn't invent how people trade, but we participated in it quite extensively. We have expectations, and everybody that's coming in from the institutional sector has certain expectations that need to be met for them to interact with an asset class. And so for us, immediately there was like, well, already you're seeing a trend here that you say like, hey, like we can do something that is a little bit wider than just like, us working on something. And also, like Ethan and I are both engineers. Like we spent our entire life in engineering. I had more interaction with business, but both of us are engineers. And ultimately, funds neither of us have built ever. I've never built a fund. Ethan never built a fund. We never built a fund together. But platforms we've built a lot, and we've built that in every asset class. So if you tend to gravitate towards the things that you do know in some cases. And this is the case where it works out okay, because we knew what needs to happen there. If we build a platform that is going to be used by small and large institutions alike. And that's the kind of stuff that we very quickly set out to build. And, thank God I got away from, like the idea of building a fund.
I'm sure you would have done great. This reminded me of something Anton said before on the air that I've actually stolen and used on stage and panels. But I think you said something like crypto is a unique asset class because it's one of the only or first or whatever unique, I don't know what word you said, asset class that actually has technology also baked into the asset class inherently.
Yeah, that is
Does that
very
sound
true.
like what you
Catherine, I
said?
stole that one too. Yeah, I stole that one too. It's good.
My God, seriously, both of you?
Anton, you just have too much wisdom to give. I'm sorry.
So much wisdom. That was the only wisdom I had, and you stole it. No, look, I mean, I truly believe in it. Here's the thing, right? Like, I love AQR. Broadway Technologies, an awesome, awesome firm, right? you usually, when you get to those kind of positions, you tend to stay because you have good budgets, you can build teams, you can build really nice technology. You're on the edge of quite a lot of things, on the bleeding edge of technology in many cases, right? But when you leave, when you're trying to build something new, is because you think that you can do more. You think that you can do something better. You can do something more interesting. And this is it. Like, to your point, there's technology that's built into this asset class, which is actually very unique. And it allows us to do today things that we couldn't do before in capital markets. We started in trading, but we continued expanding our services and continued expanding into things like treasury management and clearing and settlement and quite a lot of other things. You can think here not only about trading assets, but also about holding the assets and moving the assets, literally in the same vein. You can connect those things together here, and you can do it in a transparent and a very efficient way. And again, none of this stuff exists in capital markets. These are all verticals, and here you can connect these things. And that's kind of like also like how Talos evolved as a result of that. But that's what you get when you have technology inside an asset class, something this unique.
Yeah, that's exactly right. I think when we set out to do this, we said the crypto ecosystem from a technology perspective is a little bit messy. We can take that, we can wrap it in a nice box, we can make it really familiar to institutions. And we did that. Then we learned that actually that's not the most interesting thing. The most interesting thing is that you can actually, where your assets are on chain, you can actually settle them and move your assets around. And you can do that in real time. And like, that's the real power and innovation in digital assets that we're now learning how to take advantage of.
Okay, so fast forward to where we are sitting today in 2022. I think the term digital assets has also grown tremendously, not just in terms of trading volume or prices or any of the individual assets, but also the categories I've mentioned earlier, right? DeFi, NFTs, whatever. There's so much more and other innovation in this industry. And as this industry has grown and as Talos has grown and dev tools, and when I say dev tools, I mean like institutional focused tooling and service providers. Where does Talos today sit in the trading stack, and how have your clients either matured or grown over the years in terms of sophistication and understanding?
It's an interesting question because it definitely changed over time for us. Over the past years, honestly, quite dramatically. So in the beginning, when we set out to build Talos, the tools that we set out to build was, very similar to the tools that we've built in capital markets, which is really with a focus on trading. You kind of tend to build this, three-tiered trading system, which is basically means like, we were set to connect to all the liquidity providers, exchanges, OTC desks, and we've done a lot of that. We set out to build algorithmic trading tools, and that includes, algo, but also includes smart order routing, DMA, multi-dealer RFQ, so all the tools that people use to actually trade in the market. And then we set out to build, above all this, you kind of build this layer that is either UI or API. So you can provide the service to different clients, right? If the client is using a screen to trade, they have an experience. If the client is a systematic client, they can connect to you through an API, fix WebSocket REST, and then trade across all those different destinations in one go, right? So that's, that was kind of like the beginning of Talos. And I think that that's probably the first 2 years of Talos' life. But to Ethan's point, right, we started expanding that more and more. And especially over the past 2 years, we've been thinking about how to connect things efficiently to treasury, to custody, to clearing, to settlement. And so today, Talos is a one-stop shop, a truly one-stop shop for institutions to manage their entire investment lifecycle in the platform. So we connect to multiple custodian, and we provide a solution that looks across all the custodians that you have. And today that's becoming more and more relevant as people are thinking about diversifying custody. We connect to multiple liquidity providers, and we allow you to trade across those multiple liquidity providers, whether it's exchanges or OTC desk, dealers, market makers. And again, something that's coming into view very dramatically in the past week and a half, as you need to really think about diversifying where you're going for your liquidity, right? We are connected to clearing and settlement facilities. We partner with a number of companies there, which basically allows us to do things like, hey, here are my assets. I can move my assets maybe to an exchange or other custody solutions. I can trade those assets. And if I'm trading on credit or if I'm trading with an exchange, I can also settle. So I can also move my assets on a post-trade basis. And then we provide services around transaction cost analysis. We provide services around reporting. We're doing more and more right now, rolling out technology that allows people to start thinking about how they do lending and borrowing as well. So really starting to connect credit into the ecosystem as well. And again, credit is one of those pieces of the ecosystem that is really important and plays a huge role in the other asset classes,
Yeah, and in terms of our customer distribution, the same thing. We started really off focusing on the buy side. And these are like hedge funds that want to just do trading. They use all the solutions that we talked about there around, they need to be able to fund their accounts and settle their trades. They need to be able to enter orders, connect to all the liquidity that they can. But then as our business evolved, we also started taking on more and more clients kind of on the sell side. Of course, the biggest sell side banks, the same, like the ones that we would build softwares for previously, like for regulatory reasons, they can't really trade crypto. So kind of the sell side for us means service providers. And that's everyone from, if you want to build a crypto brokerage or a retail app that wants to be able to trade. So that means you're trading both in the open market on one side, and then you're also trading with your end customers on the other. And we provide a full suite of tools that enable our clients to do that. And it's not just trading, it's also ability to see what the prices are in the market, apply a spread if you are doing that as a service provider, provide those prices to your customers, but it's also being able to settle those trades. And that means like doing omnibus accounting, being able to settle on both sides as well. So there's a lot more complexity that's built into this in digital assets.
And actually, there's a really cool thing there that, like initially when we were building this, like obviously we were pointing towards buy-side institutions. Our first clients were crypto native, hedge funds that would come in, or institutional hedge funds that would come in. There were not that many of them 4 years ago, a lot more of them now. And then I think like at some point 2 years ago, we started getting a lot of requests about the functionality that Ethan mentioned, which is, there were these service providers, these brokers that said like, hey, we also want to offer trading capabilities to our customers. We already have the customers, like whether it's a custodian or a retail broker, institutional broker, and they said like, we want to offer those kind of capabilities. Can we white label your platform? And we did this initial build that we spent, I don't know, probably on the order of like 3 to 4 months building, as a feature, as like, hey, we added a couple of additional functionalities, admin tools, a couple of things like that. And that business took off like crazy. Today, that's half of our clients. Half our clients are people that are white labeling our technology, skinning our views, managing clients on our platform, managing how much their clients are paying them. And we now have a huge team behind it. Obviously, we developed a lot of capabilities. And so business is kind of like, this twofold thing. We have this platform for buy side. They can trade, from the beginning to an end on the platform. And then there's these people that if they want to launch a brokerage, you want to be a broker in this ecosystem in any jurisdiction, we literally have the entire thing from the box. So you have this brokerage out of the box solution. Use whatever custody technology you want, use whatever custodian you want, use whatever liquidity providers you want. We take care of the rest for you. So yeah, pretty weird evolution. I mean, you just live and learn, I guess.
Yeah, no, it's awesome to see how the tools in the product has matured and grown, like since just the two of you.
The other cool dimension there is both being able to grow both on crypto natives, being able to offer a lot of functionality for them, but then also seeing the real traditional players come into the space. We always say the institutions is coming, and it's all obviously happening slower than we wanted or expected, but it is happening. Once we've built out all the technology that enables those people to be successful like on day one. So it's been awesome to grow the business that way.
Yeah. So since we're on the topic of today, when I was prepping this podcast a few weeks ago, I was just going to ask you guys about the macro environment in general, which is like, not great. But now it's like post literally meltdown of what it feels like everything, because we're recording this on November 18th, 2022, which is 2 weeks after the FTX Alameda balance sheet first got leaked. And now we're kind of sitting and watching everything unfold and burn in front of us. So in an environment where the macro environment is challenging and the crypto environment is depressing, exhausting, depressing again, all of the above,
yeah.
Does it impact any of your day-to-day? Or like, I guess, does it impact any part of the stack? It probably does, but does it impact you guys?
Yeah, I mean, listen, of course, there's no question. As Talos, obviously, we don't have any direct exposure to FTX or Alameda. We don't hold assets on exchanges. We don't have lending of our assets, right? So in terms of risks, we directly not impacted, but it's a really painful week for a week and a half now for quite a lot of people, including our clients. But honestly, like in the wider ecosystem, anybody that's involved with crypto, it's a really rough week for you. So without a doubt, like from mental perspective, like there is an impact because you're constantly thinking about this. You're thinking about, what signs did we miss as an environment? What tools do we not have? Like, how things proceed forward. And then we kind of like thinking about our clients as well. Obviously, our clients are institutions of varying sizes. We have, at this point, we're tracking something like 14 different client types for us. So we have quite a lot of different clients that do very, very, very different things. And as a result, Some of them are directly impacted. Some of them are indirectly impacted, whether because of trading or lending activity. We're seeing that too. And we're tracking and monitoring that. And we're working with those clients to try, to see what the world holds next. But look, we're a week and a half into this. There's still a bunch of things that we don't know, a bunch of things that we're still learning. I think we're going to see a lot more revelations, unfortunately, before this dies down. I think that there's a systemic risk here that is now coming to light. There's a couple of clear things that are happening. Without a doubt, the emphasis on counterparty risk is now here to stay. People understand the words counterparty risk a lot better now because it's real, because it's not zero. And every time we said that to people in the industry, they're like, okay, but if you're on the big exchanges, it's not going to happen. This is one of the largest exchanges. So you kind of want to think about what's happening. And what we hear from our clients is interesting. We are definitely seeing flight to quality, without a doubt. Even within a week and a half, large institutions are saying and by the way, smaller clients alike, they want to see names like BNY Mellon. They want to see names like Fidelity. We believe that the trust that those names provide is actually some of the comfort that the ecosystem is looking for right now, because trust is one of those things that have been impacted pretty drastically. And the other thing that we see a lot is more and more clients understand the notion of how to actually build institutional workflows. What that means is you can't depend on a single provider. You have to figure out how you access the wider ecosystem, multiple liquidity providers, and in some cases, multiple custody providers as well, depending on your use cases. So, it's very painful. It's honestly just a horrible week. It's one of the worst things that could have happened in crypto. Nevertheless, I think it's the kind of stuff that makes crypto better and stronger. And this asset class is going to come up even stronger as a result of that.
I also want to plug the benefits of using Talos here a little bit here, because I think this is a real example of where using a platform like ours actually had a huge benefit. And so what we saw among our institutional clients is obviously one of the major exchanges that a lot of our clients were trading on is suddenly gone. If you were using a single provider there, you would have been in huge trouble. We see the benefits of diversifying across liquidity and custody. But what we saw, just from a technical logistical standpoint, is it wasn't just FTX going away. It was also just the ripples throughout the ecosystem. And we saw, there's one is that having a platform like ours, institutional quality that performs well and is reliable during times of high volatility, being able to quickly switch between providers as FTX goes away. Obviously, you still need to be able to run your business and trade, and you need to do that elsewhere. We also saw the ripple effects of some of the liquidity providers in the system weren't pricing or had technical issues, or spreads were widening, and having connectivity to lots of different liquidity sources across the ecosystem was a huge advantage there. And the same thing around diversifying your custody. So obviously you want to be custodying in multiple places to minimize the counterparty risk that Anton was talking about. So I think that overall, this is another indicator in the direction that we've kind of been seeing the ecosystem move slowly in, which is the separation of custody and liquidity. And this is how other asset classes, right? This is how capital markets works. And we're seeing this happening more and more in crypto. And this is just another thing that's going to push that forward. And ultimately, I hope we'll end up with a little bit stronger environment overall.
One of the really big criticisms that's come out, among many, but one of the themes was just lack of due diligence on the investors front. Obviously, the exchange business is very, very different from what you guys do. But I guess if you had maybe 2 questions, maybe 3 questions you think is really, really important for an institutional client to ask a service provider in terms of just risk management, or at least just asking the basic questions, what would they be?
Oh man, it's a great question. Wow, I might cop out of this because I have to tell you, it's not too. When you're doing this at an institutional level, there's a reason why you go through proper due diligence. There's a reason why you draw up tons of documentation and you're asking people. The most common thing right now, one of the most common questions that we've been fielding over the past week and a half is our existing clients that have a lot of counterparty agreements and they're trading with multiple counterparties. For them, cost of switching is zero, right? They're through our platform. They can see everybody in the same spot. It doesn't matter for them whether they trade left or trade right. But they are now, because they're considering counterparty risk, they are asking who should they trade with? How can they know that the counterparty on the other side is solvent, is not going to be in a default, is going to be able to provide them with settlement, things like that. So look, there's fundamental questions around I learned what is your governance structure looks like, what kind of controls do you have in the company, what kind of balance sheet that you have. There's a lot of these questions that are, like way more than just two that are, equally important. That's how you figure out your risk score. Like in institutional markets, you have to think about it as a collection of things that you are constantly keeping in mind. And by the way, one thing that is unique here in crypto is in capital markets, when you do this check with your counterparties, with your vendors, with your, anybody that's providing your service. You do the check in the beginning, and then you also do it periodically, but sometimes usually once a year, once maybe like a quarter. In crypto, because of some of the tools that we have here, because a lot of the information is on chain, available to everybody around the world, you can do these things for the first time in real time. You can build systems that are looking and assessing risk of a particular service provider or, vendor, counterparty, exchange, custodian in real time. And you can take action on that in real time. These are the kind of things that will help us build a better ecosystem. But no, look, it's hard to say why there was such a failure there. Part of it is because it's a brand new market, and up until a year ago, all the investment deals were done over a week. It was complete frenzy. We hear from investors, they're like, okay, even if you wanted to do due diligence, you would be left out of the deal, and you would be left out of the majority of the harder deals, right? So you're getting pressured into this. And by the way, same thing applies for the lending business. The lending dried up now, but before that, uncollateralized lending was very easy because you had plenty of people that would do it. And if you were not doing it, you could not lend assets. So some of it is that, and some of it is maturation. But to that specific question, it's really it's quite a collection of things, and you have to do it if you're operating at an institutional level. You have to think about it very systematically about how you assess the people that you're working with.
Okay, so last question. We're currently in a very, very different funding market than we were a year ago. Things have obviously slowed down. Institutional capital has either stalled or just halted or just slowed down a lot more. And given the two of you are now veteran builders, having started your company in the last crypto winter, what would be your advice for new entrepreneurs that are currently building through the bear? Ethan, you go first.
I'm going to say the first thing is that I don't feel like a veteran builder right now. I think that we're all figuring this out as we go along. But that said, there's an obvious first thing to do here, which is if you're building a company, especially if you're building during a bear market, which is have a great co-founder, which I think is we obviously do. It helps to be friends with your co-founder. I think it's worked out well for us, but that's a key part of it. And related to that is it's all about people and making sure for us is making sure that you hire the right people. And we've been so fortunate to build an amazing team of people that they understand what we're doing. They're 100% dedicated to the mission. And even though the things are down a little bit here, we're continuing to build and grow. A lot of Talos we also built during the bear market, right? During 2019 was a slow time. I remember Bitcoin, I think, hit 3,500 at some point during that year. And one of the things that we think about constantly, I think, is we would have this time where we'd see other people in the space that were growing and having success, right? And it's easy to see other companies doing it. And we'd look at it and be like, oh my God, we can do this. And so we'd always call a meeting and be like, Anton and I would come and we discuss, what are they doing? Can we do something like that? And then at the end of it, we'd be like, stay the course. So, and then I can't tell you how many times this happened. And so I think that's the biggest thing is stay focused on what you're good at and continue to build, and the market will come around.
Yeah. My answer's way shorter than that, by the way.
But don't you feel all warm and fuzzy now?
I do. And look, to be perfectly honest with you, it's not a show. I really, really like my co-founder. We've known each other for over 10 years. We've worked together for quite some time. And I think
we get it, guys. Get over it. We get it.
There's nothing more. It's just that important. It's just so tough. There's bad days, right? And there's a lot of them sometimes. And it's carrying that burden alone is impossible. And you kind of want to make sure that you have, you have the right person with you to do these kind of things. And I'm very lucky. But yeah, I'm with Ethan. Focus on the team. Focus on the team and focus on your, being very strict about priorities and just making sure that we can, you just, no matter what happens, move forward and don't run out of money. That's very, very important. Just don't run out of money.
I've been saying that lately. I'm just just survive. You just need to survive this. And if you can come out of this, you're probably going to be good.
A lot of times it is. A lot of times that's half the battle. So yeah, I'm with you. But when people ask us what the biggest advantage of Talos is, it's without a doubt the team. We have the best team out there, and we try to make it as awesome as possible to work at Talos, and we have effectively zero attrition because we really, really like our team, and we'd like to think the team likes it here too.
Nice, guys. I'm going to end this on such a nice, warm, fuzzy, positive note. So with that, thank you guys for coming on today. Really appreciate your time, and hope to come by your New York office sometime.
We're looking forward to it.
Always welcome.
Thank you so much for having us.
Thanks a lot, Captain.
Thank you all for tuning in to another episode from Season 2 of Cross-Chain Examination, hosted by Catherine Wu and presented by Archetype. If you like this episode, please give it a 5-star rating, like it on YouTube, and subscribe to the show if you haven't already. Also, make sure to check out Season 1. We have 10 episodes from awesome guests talking about all kinds of topics, from privacy in crypto to crypto regulation to many, many other topics that I care deeply about. Share this also with a friend, with a coworker, and maybe even family if you enjoyed it. And give us a follow on Twitter. We are at CrosschainPod. DM me, at me with any suggestions, guests you would like to hear, and anything else. Thank you so much again, and hope you tune in to our next one.